What's up, tax savers? Today it's a little bit of story hour here. I want to give you an example of a story of someone who tried to get a little too creative on their taxes and it didn't work out. And we're going to have a series of these coming up in the coming weeks just to kind of highlight why you need to have proper tax planning, but make sure that you're crossing your T's, dotting your I's, and doing things that actually are under the letter of the law. And so this one story involves a child pageant. Then the daughter was a successful pageantress, I guess. I don't know, pageanting. She loved pageanting, kind of like a Miss Honey Boo Boo. And she won about $2,000 in her process of prizes by being a successful little pageant girl. And so obviously when you're going around to different pageants, there's a lot of expenses going into that. And so the parents of this child tried to take that $2,000, claim it as their own income, and write off all of that travel as deduction against that income. And that got thrown out really quick, and the reason why is because the IRS determined that the money was earned by the daughter, but the expenses were paid by the parent, and those don't match. So it should have been picked up as income by the child, even though the parents were paying for the expenses. So those got thrown out. So that's a matching rule. If you've got expenses coming in to you, then those have to be or income coming into you, those expenses have to be against that in the same person and paid for by the same person. So that's something to think about if you're thinking about getting your kids into any form of contest. You have to win the money yourself and pay for those expenses to write them off. So fun little story time. We'll see you next time.